Welcome back to the deep dive. Today, we're going to be looking at something a little different.
Oh.
Yeah, we're going to be talking all about building confidence in investing.
Oh, cool.
Yeah, we've got a podcast episode called Investment Mentality, Building Your Confidence and Strategy, and a document called Building Investment Confidence.
So, two sources.
Yeah, and, we're going to kind of see what they have to say, and hopefully you, the listener, will be able to walk away from this deep dive feeling a little bit more confident about making investment decisions.
Sounds good.
Oh.
So actually, both sources emphasize that, true confidence, it doesn't just happen overnight.
Yeah, they both kind of talk about it like you're building a skill almost.
Right. Yeah. One of them even compares it to learning to ride a bike.
Mm-hmm.
You don't just get on and suddenly you're a pro, you're going to wobble. You might even fall a couple times.
Right.
But the important thing is to get back on and learn from your mistakes.
Yeah, and actually, the document makes a similar comparison, but in a different scenario. They talk about psychological resilience and investing, being able to sleep soundly even when the market is, volatile.
Oh, that's a good one.
Yeah, do you think those are helpful comparisons for people who are new to investing?
Oh, absolutely.
Yeah.
Yeah, they really highlight that building confidence takes time and experience. It's not about avoiding mistakes altogether.
Right.
But it's about developing that mental toughness, to kind of weather the inevitable ups and downs.
So it's more about the journey than reaching some end destination.
Exactly. And, the sources also emphasize that real confidence comes from a deep understanding of what you're investing in.
So it's not just about picking stocks with catchy names or following the latest trends?
No, not at all. Both sources really stress the importance of understanding the fundamentals of a company.
Okay.
So things like revenue structure, their profitability, debt growth, potential, even the broader industry landscape.
Yeah, and the podcast actually suggests going a step further. They talk about looking into a company's history.
Yes. Looking at how they performed during previous market downturns, their dividend payouts over time, and their overall stock price volatility.
Oh, interesting.
Yeah, they say that, understanding how a company has weathered storms in the past can give you more confidence in its ability to handle, whatever challenges come up in the future.
Yeah, they had a really interesting example, actually. They talked about this stock 00919 that actually rose on its dividend payout day.
Oh, wow.
Most people would think that a stock would fall on a day like that.
Right.
But
it's a great illustration of how, really deep knowledge can bring a sense of calm, even when the market seems really unpredictable.
Mm-hmm.
The podcast suggests that the investors who held onto that stock and ultimately benefited were probably those who truly understood the company's underlying value.
So it sounds like doing your homework and getting to know a company can really pay off, especially when things get a little rough. But even with all of that knowledge, both sources stress that you can still make bad investments if you don't look at the price.
Yeah, that's true. Even the best company in the world can be a bad investment if you buy it at the wrong price.
Yeah, I've heard the saying, a good stock at a bad price is a bad investment.
Yeah.
And it kind of sounds like they're saying that, getting caught up in that fear of missing out can lead to overpaying, and that can really hurt your returns in the long run.
They both caution against letting your emotions like FOMO drive your decisions.
Right.
Overpaying for a stock, it can lead to unnecessary losses and just increase your anxiety, especially when the market is fluctuating.
So how do you avoid falling into that trap?
Well, the document actually specifically recommends starting small when you're first beginning to invest.
Okay.
Just test out your strategy with smaller amounts to gain experience and build confidence before you go and commit, larger sums of money.
So it's like trying a new recipe before you serve it to a big group of people.
Right.
You don't want to go all out if you don't know how it's going to turn out.
Exactly. By starting small, you can kind of refine your approach,
right.
Get a feel for the market, and you build that confidence in your decision-making process.
Right.
The document also goes into some more technical things like, looking at cash flow statements.
Okay.
Which can really give you a much deeper insight into a company's financial health.
So it's not just about feeling good, but it's about having that knowledge to back up that confidence?
Exactly.
So now that we've talked about building confidence and understanding the fundamentals, how do we pick a strategy? Where do we go from here?
Well, both sources emphasize the importance of having a strategy that aligns with your individual goals and risk tolerance.
Right.
They really suggest that, having a plan and sticking to it is really a key component of feeling confident about your investments.
Yeah, and they both mention how once you have that strategy, you have to really believe in it
Yeah.
and its effectiveness over the long term.
Yeah.
Which kind of brings me to something else they both talk about, and that's tuning out that market noise.
Oh, yeah, absolutely. They suggest that constantly reacting to every little fluctuation in the market can really lead to making emotional decisions.
All right.
And it can really undermine your long-term strategy.
So are they saying we should just ignore what's going on in the market?
No, not necessarily. It's more about recognizing that short-term market movements, they don't always reflect a company's true value or the effectiveness of your strategy. They both stress the importance of maintaining a long-term perspective.
Okay.
You know,
So it's like a marathon, not a sprint.
exactly. You need to pace yourself. You need to trust your training and focus on the finish line
Right.
instead of getting distracted by every little bump in the road.
And that's where having a clear strategy and that deep understanding of the companies that you invested in can really make all the difference.
Right.
It allows you to stay focused on those long-term goals, even when the market is being a little crazy. Okay, so we've covered building confidence. We've talked about understanding the fundamentals and developing a strategy.
Yeah.
But, even with all of that, the market can still feel really unpredictable. So where does that leave us as individual investors?
That's a good question.
Like, do we have any control in all of this?
Well, both sources actually address that directly. And they argue that you, the investor, you are ultimately in control.
I think that's where a lot of people struggle. It feels like the market is just this roller coaster we have no control over.
Right.
Yeah.
Yeah, that's understandable. However, while you can't control the market's ups and downs, you can control how you react to them.
So it comes back to that mental resilience we talked about earlier.
Exactly. It's about empowering yourself with knowledge and a clear strategy so that you can make informed decisions rather than being swayed by fear or hype.
Okay, so
Up to.
it's all about having that plan and sticking to it, even when things get a little crazy.
Exactly. And remembering that you're the one calling the shots. You choose what to invest in, when to buy or sell, and how much risk you're comfortable with.
And both sources, actually, they talk about how we shouldn't just follow the crowd. One of them uses the term market consensus
Yeah.
and how, blindly following what everyone else is doing can actually be pretty risky.
Right. It's a really important point.
Yeah.
They point out that some of the most successful investors are the ones who think differently and challenge those traditional ideas.
Yeah.
Of course, you shouldn't just ignore all the experts.
Right.
But you should definitely do your own research and form your own opinions.
Yeah. That makes sense. It's like that saying, if everyone is thinking alike, then someone isn't thinking.
Exactly.
It's like a good reminder to do your homework and think critically about, what you're reading and what you're hearing.
Absolutely. And, building investment confidence is a process.
Yeah.
It's not something you achieve overnight. It's a journey.
Okay.
It's about constantly learning, adapting, and refining your approach as you go.
So let's recap what we've talked about today.
Okay.
First, we need to forget that confidence happens overnight.
Right.
It takes time, experience, and like you said, developing that mental toughness to handle the ups and downs of the market.
Absolutely. The second thing to remember is that we need to go deeper than just surface level knowledge of stocks.
Right.
We need to really understand the companies, their financials, their history, how they fit into the industry. And, part of that is learning about things like cash flow statements to really understand their financial health.
Okay, good point. So the third takeaway is that even a good company can be a bad investment if you don't buy it at the right price.
Right.
We have to be aware of things like FOMO, that fear of missing out, and make sure we're not paying too much.
Absolutely.
Yeah.
The fourth thing is having a good strategy that aligns with your goals and your risk tolerance.
Right.
And once you have that strategy, you need to trust it, even when the market gets a little crazy.
Yeah. And finally, we need to remember that we are the ones in control. We make the decisions. And to do that well, we need to arm ourselves with knowledge, tune out all that noise, and make choices that, help us reach our financial goals.
Exactly. It's actually pretty empowering to remember that we have more control than we think, even in a market that feels so unpredictable.
So what do you think what resonated with you from our deep dive today?
Maybe you connected with the idea of starting small and learning as you go.
Right.
Or maybe it was the part about ignoring the market noise and focusing on the long term.
Yeah, whatever it was, we encourage you to explore these ideas further and maybe check out some of the resources we mentioned.
Yeah, knowledge is power.
Exactly.
And as you continue your investment journey, remember it's not a race. It's about finding what works for you, building your knowledge, and making decisions that align with your financial goals and risk tolerance.
So we hope this deep dive has given you some good information and helped you feel a little more confident about investing.
Yes. Stay curious, keep learning, and don't be afraid to ask questions.
Right.
Trust in your ability to make smart investment decisions.
That's it for our deep dive today. We'll see you next time.
Happy investing.
You know, maybe what really resonated was that even experts make mistakes. Oh,
Yeah.
all part of the process.
Definitely. It's about learning from those mistakes and, having the resilience to keep going.
Yeah.
Remember, it's a long game.
Right, and it's a game you don't have to play alone.
That's true.
If anything from today got you thinking, maybe it's time to check out some of those resources we mentioned.
Yeah, good idea.
Or even talk to a financial advisor, someone who can help you build a plan.
Yeah, definitely think of this conversation as just the start.
Yeah,
The more you learn, the more confident you'll feel.
exactly. We hope this deep dive has given you a good foundation to build on.
Yes, definitely.
And remember, building that confidence, it's a process.
Mhm.
It takes time.
Not a destination.
Yeah, so be patient, stay curious, and most importantly, enjoy the journey.
Yes. Happy investing.
That's all for today. Thanks for tuning in to the deep dive.
See you next time.